Good afternoon, everyone, and welcome to Stock Market Today. Ali Corman, Ed Carson here with a breakdown of the action in today's session where we saw a stunning reversal in the market. But Ed, is this the beginning of a strong new rally or just a continuation of more volatility in the market?
I think we're going to see more volatility. I don't know if we'll have to see. Day one, we'll discuss it. There were some losers today. JPMorgan Chase, a lot of banks had trouble today. Sanctions out today. Gold stocks, not so good. Newmont Mining reversed lower as the safe haven sort of went away. Palo Alto was a real surprise. A lot of cybersecurity names really surged.
Yes, they did. So we'll take a look at that. But first, let's check in on those major indexes. So here's a look at the NASDAQ, which gained 3.3% today, a big upside reversal. We also had the S&P 500 up 1.5%, the Dow up about 0.25% today, and the Russell 2000 up about 2.4%. So it was looking pretty doom and gloom at the open, given the geopolitical situation that we are in right now with Russia and Ukraine. But the end of the day, that's what we always say. It doesn't matter how you open, it's how you close, Ed.
Yeah, and it's not the news, it's the reaction to the news. I mean, the NASDAQ opened in a bear market because it was already down like 19.5%. So it was in a bear market and things aren't looking good. It seems like investors feel like the sanctions weren't as harsh as expected, so there won't be the repercussions on the global economy, on Russia retaliating. Whatever the reason is, though, the market rallied. You could argue it was due for a bounce. We've obviously been selling off quite a bit. And so maybe we were just due for a bounce, or maybe we'll go from here. What we need to see here is continued strength. And we had that in late January, where we had a similar type of plunge and then rebound. Obviously, today's gain was better. We did have a fall through day, but that failed ultimately. So even when we have a fall through day, whether it's a few days from now or a few weeks from now, we may still be a little hesitant. I mean, you can have these big swings because there might be reasons why you'd still be a little nervous in a rising rate environment.
Right. Exactly. Yeah, there's so many reasons, Ed.
So many reasons.
You could list them all for us, but we've got to save a little bit of time. But yeah, one day does not a rally make. We see some of the biggest percentage gains in the market in the middle of bear markets, but this is a step in the right direction, you could say. So we want to see that continued strength. But what about that concept of three waves down? Is that something we need to be worried about here?
It's always a possibility. That's what happened in late 2018. We had two failed rally attempts, failed follow through days, not just rally attempts, confirmed rallies, and they failed almost immediately. And then we finally rebounded later. Whether, is this the second leg and that'll be it? Sometimes it's just one leg, sometimes it's two legs, sometimes it's three. So we'll just have to see, but you can't be, the one day is not enough. The market has to constantly prove itself to you for you to put in your money. I mean, this is your money that you're putting in. So you make the market prove it to you.
Yeah, well, it's pretty treacherous market, so we're going to be careful, but we're also going to roll with the punches and adjust to new information as it's presented. Quick check-in on the other major indexes. So here's a look at the S&P 500, undercutting that 4,200 level intraday, but closing higher. We also have the Dow, the smallest gain today in a slightly delayed chart here, but holding above that 33,000 level. Let's take a look at the Russell 2000 through the IWM ETF, a big upside reversal here. It looks like it didn't quite undercut the low. I don't know. It was right around the low from late January as well, rebounding today. So kind of range bound here in a sense. And let's take a look at the 10-year Treasury yield here today, Ed. What can we glean from this?
Well, I mean, this is safe haven. People are rushing into bonds, rushing into gold. And then it's like, well, when the risk came on, the bond yields basically erased all their losses, maybe just closed a fraction lower. So yeah, this is a reaction to just that risk on, risk off trade. Definitely the trend is still up. So if the Russia crisis goes away, that doesn't mean other problems go away. I mean, I'm not going to list them all.
Read Ed's futures column. I'm sure that's where you can see those things. All right. Well, let's take a look at JPMorgan. Speaking of interest rates, coming off of its intraday lows, but still closing down almost 3% here today, Ed.
Yeah, and you would have thought just off of, there's reasons because the yield spread has been narrowing. So even though rates have been rising, it hasn't been necessarily a great scenario for banks. While there were sanctions against Russian banks, and I think that's the concern for this, is like this means more compliance costs for JPMorgan, for foreign banks, but this was even hitting regional lenders. I mean, it's sort of like, I think, concerns about the yield curve, economic growth, uncertainty. This that these this is, this is something like a few weeks ago, you would have thought, hey, this is a leading group or a group that you want to pay attention to, but it's something that changes. You can't just stick with it. And it's the same goes with high growth stocks, but it's also, banks will have the same kind of thing. And this is just out of favor right now, the whole sector.
That's so true. Price pays. You got to be listening to those charts when you see something change. And now let's take a look at NEM Newmont here, mining group, gold play reversing lower by about 2.3%, had earnings as well, but safe haven, not where we want to be anymore with the risk on environment. At least that's what we saw today.
Yeah, it did bounce back at the very end for whatever reason, because it was actually it did round trip essentially, if you consider 65.59 an entry. I mean, yeah, I mean, it's sort of like this. I mean, with gold, I mean, there was safe haven flows. The problem with safe haven flows, especially in emergency situations, it's almost like dilating your pupils when the lights are really dim. Oh, that's great. Now you can see. And then somebody turns on the lights and you go, oh my God, that's horrible. I mean, gold just was up 3% overnight, and I'm not sure where it closed because it closes pretty early, but I think it was essentially trading lower. So that's just something that, it seems like, oh, it's safe havens can be not safe depending on around market turns. And that was my concern I have with gold stock, because I just never know when that's going to just turn around.
Yeah. Ed, I don't know how you do it, how you come up with all those analogies that are just so detailed so quickly all the time, again, on the fly. But yeah, I think this also shows why you don't chase and why you don't want to be investing emotionally, looking at the futures and, jumping on something like this right at the open. If you are going to make a tactical move in the middle of a correction, you need to not only play it small, but make sure you don't chase.
Yeah, I mean, that's always the case. But yeah, certainly don't buy even safe stocks in extended. I mean, that's not a safe play.
Exactly. Okay, well, let's close it out with a look at Palo Alto Network. Security software had a great day. And lucky for me, I was alerted to this because of that handy dandy alert line that I drew on the chart. It's a little high. I think if I reactivate it, it'll go a smidge lower there for me. If it wants to cooperate, it looks like it doesn't want to. But at any rate, a strong day for Palo Alto, up over 13%. A big upside reversal, some volume behind the move, retaking the 50-day line, etc. Ed. So it looked very powerful.
If this were a better market, even if we're just a few days into that rally attempt, you might start thinking about, oh, I want to buy in, because in addition to the fact that growth is rebounding, I mean, Russia really imposed a lot of cyber attacks against Ukraine. It's really not that new, but they really did it, putting into stark relief how much that might come into play. You can imagine cybersecurity warfare might be an issue going forward. So anyway, these plays were really in focus today. The relative strength line's at a new high. In any kind of scenario, you'd be saying, oh, this is an early entry. I can buy it here. The group was powerful today. Yeah, that blue dot, basically finding support at the 240 week, all sorts of good things. They had powerful earnings this week. I just think it's way too early, because you could
have the market
with the market.
That asterisk.
There's that huge on the day one. Yes, maybe, into buying an individual stock on day one of a rally. If you were to do something wild and stuff, buying like a sector market ETF is risky enough, too risky for me. But buying an individual stock, you just don't know. This could come out of favor pretty quickly or pull back quite a bit and then set up later, shaking you out. But this is definitely this company, this group, even though the group is pretty low right now, there are some names in there that are shaping up.
Yeah. And it's growth. So not only does the chart look healthy, but it's actually a growth area, technology, software, something that we typically like to be buying rather than, those boring, miners or fertilizers or things like that.
It is nice when those are in there. I mean, some of those sectors, and yeah, it would be nice to have growth stocks come back again. We can't force it happening, but boy, it'd be nice to have growth stocks coming back in real numbers.
All right. Well, we'll have to see. Ed, feels like we're at a pretty critical juncture here, but tomorrow is another day. So we'll have more going on in the morning on IBD Live. So make sure you tune in. We will be joined by Scott St. Clair. Always good to get his thoughts on the show. So make sure you join us as well. Investors.com/IBD Live for all the details. Thanks again for tuning in, everyone. We'll see you back here tomorrow.